Welcome to Insightful Value, where we uncover investment ideas hiding in plain sight. Today's spotlight, Bank Rakyat Indonesia. Is the low stock price a golden opportunity or a red flag? Let's break it down. This video is for informational and educational purposes only and does not constitute financial advice. Don't forget to like the video and subscribe to the channel for more insights. Now, let's dig into what's going on with Bank Rakyat Indonesia. Bank Rakyat Indonesia, or BRI, is the largest microfinance bank in Indonesia and one of the oldest financial institutions in Southeast Asia. It focuses heavily on micro, small, and medium enterprises, think farmers, street vendors, and local businesses. Its mission? Financial inclusion at scale. And that strategy has worked for decades. But now, the stock price has dipped and investors want to know why. First, let's talk business model. BRI earns money primarily through lending, particularly in the micro and small business segment, which offers higher yields but also comes with more risk. It has an extensive network across Indonesia, even in rural areas, and its customer base is massive. It also earns from consumer banking, digital services, and investment products, but loans remain the core driver. From a fundamentals perspective, BRI remains solid. In the first quarter of 2025, it posted revenues of over 47 trillion Indonesian rupiah, with net income reaching nearly 13.8 trillion. Assets grew by 5.5% year-over-year, passing 2,000 trillion rupiah. It also maintains a very healthy capital adequacy ratio of 24%, and its loan-to-deposit ratio is well balanced. One highlight, over 65% of its deposits are in low-cost current and savings accounts, helping it maintain a strong net interest margin. That said, in the latest quarter, net profit dropped nearly 10% compared to the previous quarter. That decline came from tighter margins and rising credit costs, especially in its core microlending portfolio. Non-performing loans have ticked up slightly. Also, increased competition in the micro segment is pressuring loan pricing. Analysts are watching this closely. Another area to watch is dividends. BRI has a tradition of generous payouts, often around 85 to 90% of profits. In 2024, it offered a solid dividend yield of around 8 to 9%. That's attractive if you're income-focused. But it also means the bank retains less capital for expansion, which could limit future growth. And that's part of why analysts have mixed views. On the one hand, BRI is stable, profitable, and pays well. On the other hand, high payout ratios and margin pressure raise concerns about long-term momentum. Also, macro conditions in Indonesia, like currency fluctuations, inflation, and shifts in government policy, can impact bank earnings and investor confidence. So, what's the value perspective? Despite the dip, BRI is trading at about 9 to 10 times earnings. That's cheap compared to global peers. And if you believe in Indonesia's long-term economic growth, this may be a chance to buy a leading franchise at a discount. But short-term, risks remain. Slower profit growth, margin squeeze, and a high dividend policy may limit upside. Whether you invest now or wait depends on your appetite for volatility and your outlook on the Indonesian economy. At Insightful Value, we provide in-depth analysis of undervalued companies like BRI. We break down the key data and explain why these companies are worth watching, no jargon, just clear insights. Whether you're new to investing or a market veteran, we help make complex financials accessible. For more detailed breakdowns on this and other companies, check out insightfulvalue.com. Don't forget to like this video, subscribe to the channel, and visit our website to stay ahead of the curve, insightfulvalue.com.